Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
One other point to make about the bull side is, once you have a retest, this gives you a low-risk entry point. Now keep in mind, you can only have a bull retest if you've previously had a bull confirmation. So if you never had the setup and confirmation, the two-step process beginning, then you can't have a retest, okay? But once you do, not only can you set your closing stop there, but it gives you a low-risk entry point. And why is it a low-risk entry point? Because the low of that retest bar is your closing stop. So you've defined your risk to that tight level, just to the low of that particular bar where you're entering. So it's a much tighter stop that you all of a sudden have on your position. Now, we'll go ahead and jump in the charts. The bears is going to be just the opposite rules. So I won't bore you with that information. We'll go ahead and take a look at some examples here. It's the exact same concept on the bear side, just obviously reversed. So first of all, we're going to take a look at the EUI here. And for those of you who are not familiar with it, that takes a look at the euro relative to the dollar. Now to give you a quick overview of what we have here on the screen, because I do have a fair number of indicators. Up at the top we have our proprietary acceleration bands, similar in concept to Bollinger Bands. They're adaptive bands. But we really look for, when you get price action outside of those acceleration bands, we don't look for reversals. They're named obviously acceleration bands. We look for potential acceleration points from there. I do have, those are on a 20-bar setting. I do have just a simple 10-bar exponential moving average in yellow that's kind of wiggling through there to let us know, where the two different time frames are looking at. Then I also have a longer term moving average, the purple line right here. It's just a simple 200-day moving average to give me some sort of an idea where the long-term support and resistance levels are. I do have pre-coded in from our software here the buy, sell, and exit signals that take place based upon our %R indicator. So that's an easy way for us to be able to see what we're talking about here tonight. At the bottom, I do have our %R indicator. As you can see, I've drawn lines at the 80 level and at the 20 level, and then also at the 50 level. 50 level with our range for this indicator going from 0 to 100. 50 is just the midline. So 50 tells me it's kind of the line in the sand. Anything above that has a bullish bias to it. Anything below that has a bearish bias to it. Okay? Now, if we're in between 80 and 20, somewhere in between that range, we consider that to be a range-bound market. Whereas anything above 80 and anything below 20, we consider to be trending. Okay? And finally, down at the bottom, we have your standard run-of-the-mill DMI and ADX indicator. Same traditional 14-bar settings that it defaults to on most software platforms. And I've drawn horizontal lines at 40 and 25 because those are some of the levels that I really see as key acceleration points and reversal points, as we'll see here. What can we get from this particular chart here? This is a daily chart. I do see Harold asking that. So up at the top, for all these next 5 or 6 charts that we're going to look at here on these next 5 or 6 slides, I'm going to have the time frame up there at the top for all of us. So if you're ever questioning that, just take a look up there at the top and it'll clear that up for you. So we'll start on the left of the chart, obviously, move our way left to right. The first thing I like to look at is just simply the acceleration bands. And as you can see here, when we get a break of these acceleration bands, the way this indicator was looking for acceleration. So it was looking for a continued move to the upside. Now, as you can see right here, back in August of 2008, we got our buy signal right when we started to get a break of the upper acceleration band. Now keep in mind, all these buy and sell signals are strictly based upon %R. So as you can see, around the time we got our buy signal, I'll draw a line where we would be with %R. So we had our break above 80, and then that was our setup, and we had the subsequent confirmation after that. So that takes us to a state where, as we teach at BigTrends, you're bull confirmed. So you're in a confirmed bullish trend. From there really is no coincidence that we're seeing a break of the upper acceleration band, which tells us it's a potential acceleration point for this particular currency pair. Then if you go down and you take a look at our DMI and ADX, what's happening? Well, your positive DMI, which is going to be in the blue, is rising. Your ADX is starting to rise for you there as well. Now, what I really like to see for most of my trends is to see an ADX that really starts to accelerate through that 25 level. That's why I have the horizontal line there for us. So I'll draw a line straight up, and I'll change the color for us here, so hopefully we'll be able to see a little bit better going forward. But ultimately, as you can see, once we do get that break above 25 on the ADX, ADX tells you the strength of the trend. So an ADX that is above 25 and rising, I consider to be a very strong trend. Look what happens when all your indicators line up. That's your real sweet spot of your trend. Now, to dissect this, let me clear everything off for you here and show you how we break down an overall trend. So we'll go on this particular trend just strictly from the bottom to the top of just this one initial segment. Okay, so we're looking about a month and a half, 2 months worth of data right here on this daily chart. Okay, what we like to do is take a trend and dissect it into thirds. Now our goal when we place a trade is to be able to capitalize and obviously ultimately profit from this middle portion of the trend, or the middle third, as we like to say. So you have your initial third where you have to see some initial thrust and acceleration that takes place. That's typically somewhere in that area where you're likely to get a buy signal. From there, the brunt of the move is going to take place in that middle third or even middle half. Some people like to look at it in terms of quarters. So the first quarter is the initial start. The middle half is the section you want to catch, and then the end is where, it'll start to fizzle out a little bit on you. If you can consistently just catch this chunk, you don't have to get in at the absolute bottom and get out the absolute top. You just have to catch a sufficient portion of this particular trend. And as you can see, on some of your best signals that you take, your indicator is going to allow you to stay on the trend longer than just that half, and that's perfect. But at a minimum, for your consistency purposes, you want to make sure that you're just trying to catch a portion of the trend. If you're trying to catch more than that, what are you doing, really? You're being greedy. And, greed is an emotion, and it's an emotion that ultimately drives traders to problems. So that's something that you want to stay away from. I know it's ingrained in all of us, and it's very easy to do. But at the same time, it's something you want to avoid, and you want to build indicators around you that ultimately can do this for you.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.